Think you need thousands of dollars to start investing? Think again. Even with only $100 in your pocket, you can begin your investing journey today. In fact, experts point out that investing is one of the key strategies for building long-term wealth and financial security. In this video, we'll break down exactly how a busy student can take that first $100 and put it to work. When I was in college, I remember living off ramen noodles, paying tuition in installments, and dreaming of more. I had about $100 left after paying rent and textbooks, and I wondered, could I ever invest with? Investing means using your money today to make more money later. Instead of letting $100 sit in a savings jar or a checking account, investing puts it into things like stocks or funds, with the goal of growing over time. Unlike day trading or quick flips, investing is a long-term strategy. In fact, investing typically involves holding assets for years or even decades. Experts emphasize that. Why does this matter? First, inflation gradually erodes the value of cash. If you keep $100 under your mattress, its buying power will shrink over time. As Investopedia explains, holding your savings as cash means it will just sit and be slowly diluted by inflation. Whereas even in the safest investments, it will earn some money for you, building on itself. In other words, investing helps your money beat inflation. Second, time is your greatest ally. The earlier you start investing, the more you benefit from compound growth, your returns earning returns. Investopedia notes that the sooner you begin investing, the more time you give for this compounding process to work. That means even small sums invested early and regularly can grow surprisingly large over years. 1. Open an account with no minimums. Many online brokerages and investing apps today let anyone start with very little money. For example, platforms like Fidelity, Robinhood, or Webull have no minimum balance requirements. You can open an account, link your bank, and fund it with $100 or even less. Some brokerages allow investing in fractional shares, meaning you can buy a portion of a single share. Investopedia notes that with fractional shares, you can start investing with only $1 in many cases. This makes it easy to get started, even if $100 is all you have. 2. Choose a broad investment, ETF, or index fund. For beginners, a great strategy is to buy an ETF, exchange-traded fund, or index fund. An ETF is like a basket of many stocks or other assets that trades on the stock market just like a single stock. By owning one share of an ETF, your $100 is actually invested across dozens or hundreds of companies. This spreads out risk. If one company does poorly, others in the fund can balance it out. Many popular index ETFs, like ones tracking the S&P 500, the top 500 U.S. companies, have very low or no minimum investment. For example, Fidelity's S&P 500 index fund can be bought for any amount under $100. So you could take your $100 and put it into an S&P 500 ETF or index fund, instantly owning a piece of America's biggest companies. The fees are usually low, which means more of your money stays invested. 3. Try fractional shares of stocks. Maybe you have a favorite tech company or brand you love. Thanks to fractional shares, you don't need to wait until you have thousands to buy that stock. Fractional shares let you buy a slice of an expensive stock using a small dollar amount. For example, if a share of Apple costs $150, but you only have $50, you can invest $50 and own one-third of a share. Many brokers offer this feature. As Investopedia explains, fractional shares allow you to invest by dollar amount, not by whole share count. This keeps the entry point low. In practice, some apps let you invest with as little as $5. One article highlights that Webull allows investments starting at $5 with no commission, and platforms like Robinhood or Fidelity also sell fractional shares. So with your $100, you could buy fractional pieces of a few companies you believe in, or just invest all in one. 4. Automate and save more. Once you've made that first investment, set up a habit. Many apps let you schedule automatic deposits, even just $5 or $10 every week, into your investment account. Over time, those little contributions add up. You can also try a micro-investing app. For example, Acorns rounds up your everyday purchases to the next dollar and invests the spare change. It's a hands-off way to keep investing without thinking about it. The key is consistency. Even if you start with $100, aim to keep adding to it whenever possible. Remember the money rates guide. Everyone needs to start somewhere, and $100 will get the ball rolling. The important part is making investing a regular habit. You're also setting up future security. Those who start investing early often thank themselves later when they have a cushion for emergencies, a bigger down payment for a house, or just peace of mind. It feels good to know you're not just drifting financially. If you come from a family that never talked about stocks or savings, you're already breaking a pattern by investing now. You're creating a new legacy of financial smartness. One day, even on a tight student budget, you'll look back proudly and say, I started with $100, but I took that step.